Welcome back, and joining us now is Mr. Kang, Head of Global Demand and Asia Analytics, S&P Global Platts. Kang, hi, thank you so much for joining us. And what a market it has been overnight, with nearly 5% of a decline coming in for the crude oil prices. How do you read the price movement and, of course, the fundamentals behind it?
Thank you very much for having me. Yeah, indeed, oil prices yesterday and recently have been affected by a combination of the news of the OPEC Plus continue to hold their line that they are going to reduce the voluntary production cut, which means they are going to start increasing their production as early as next month. So that news coupled with demand kind of weakness, right? The demand sort of growth. There is a lack of strong growth in China and some other countries. But I will say that fundamentally, this is August and then September, right? Fundamentally, we are globally, the oil demand is at about the highest level. So there is a lot of demand there, although we are heading towards a lower growth, right, starting from this month. But market sentiment pushed the price even further down. While when we continue towards the end of the year, even fundamentals will suggest that there will be a softness of the market. So we are moving towards a market that will become softer towards the end of the year and definitely in 2025.
Kang, since there are demand concerns right now, so what is your sense? Is all of this concern factored into the prices, or are you looking at prices reaching almost $70 for the Brent now?
Yeah, currently dated Brent, right? If we talk about the cash price, yeah, it's lingering around $76. That is fundamentally is kind of lower than we thought. So the market fundamentals today support a little bit higher price. But you will say that this is the time that there is a market sentiment works in the opposite direction rather than the bullish side. It's the bearish side. Demand is just slightly weaker. We are still see 1.5 million barrels per day demand growth for the whole year. China, just like maybe a few months ago, people feel that the growth is 500,000 barrels per day. Now it's down to like 400 or slightly below, like 350 to 400,000 barrels per day. That's about the what we call weakness we see. It's pushing down the global demand growth a little bit. It doesn't mean that demand growth will be negative, right? For that matter, for the whole world. Sure. It's still positive. Even for 2025, we're going to see over 1 million, even 1.2 million barrels per day of demand growth. It's just a supply is a plenty. There is a plenty supply, and plus overall the stock market sell off, right? The volatility of the stock market that influence the Brent prices as well.
Kang, if I can push you for the price sense here, so would you expect a slight down like this, or do you think we are now factored in all of what could go really wrong in sense of supplies, whether it was Libya output coming back, OPEC output coming back as well, weak China demand, strength in US dollar? Have we factored in, priced in all of that, or you think there is further decline coming?
In terms of possibilities, there definitely is a more downside on the possibilities. Okay. We could even see $50, $60 only on the condition that OPEC Plus push through their 2.5 million barrels per day of cumulative production increase by the end of next year. We don't see that happen. We don't see that in our base case. We think they're going to do probably half of that. So we may go even on average next year, maybe $75, $77 on average. But definitely, if that surplus production comes to the market, prices could go down below that.
Kang, what's your sense for the Asian demand going forward? I mean, China being on the weaker side, but Japan seems to be doing well, especially Indian market demand. How are you looking at as we get into 2025?
Yeah, so for 2025, Asia is still if we look at 1.2 million barrels per day for the whole world, Asia contribute about 800, 900. China is still positive next year. It's another 350 around, 350 maybe towards 400. So China is still the biggest volumetric sort of contributor. India is very solid. India is around 200, 250. So that kind of a range will continue. China is fastly coming down, right? If you talk about 2026, 27, China will come down even further, while India stay there at this kind of a growth, like 150 to 250,000 barrels a day of growth for many more years. We are eventually will reach the plateau of the oil demand down the road, not next year, not probably anytime soon, but eventually we'll get there.
Kang, thank you so much for joining us. Well, that's the sense coming in from S&P Global Platts that they are anticipating crude oil prices to further decline from here. Well, Chinese demand is a bit of a concern, but the Indian and the rest of the Asia perhaps could do better. It also is going to be about the average prices next year, anticipated anywhere between 75 to 77, so much lower than from where we started in this year itself. But with that, that's all the time I have here on the show. Coming back, Business Lunch will take all the action forward.